MindCypress. Education beyond boundaries.
U.S. and ML regulatory agencies. The Federal Reserve Bank, FRB, Office of the Comptroller of the Currency, OCC, and Federal Deposit Insurance Company, FDIC, share supervisory and regulatory responsibilities over depository institutions. These agencies participate in BSA rulemaking, examine for BSA compliance, take enforcement actions, and make other agency referrals. States also supervise and regulate banks within their borders, if the bank is chartered by a state. State regulators also examine for Bank Secrecy Act, BSA, and Office of Foreign Assets Control, OFAC, compliance, take enforcement actions, and also make referrals. Following table will show you the type of financial institution and respectively their supervisor and regulator. Governing body, key provisions. Financial Crimes Enforcement Network. The Financial Crimes Enforcement Network was created in 1990 by Treasury. FinCEN mission is to enhance U.S. national security, deter and detect criminal activity, and safeguard financial systems from abuse by promoting transparency in the U.S. and international financial systems by administering and enforcing the BSA and enforcing the U.S. Patriot Act, supporting law enforcement, intelligence, regulatory agencies, and intergovernmental bodies, e.g., FATF, through sharing and analysis of financial intelligence, building global cooperation with its counterpart financial intelligence units, and providing strategic analysis, networking people, ideas, and information. Securities and Exchange Commission, SEC. The SEC is responsible for regulating the securities industry. The SEC monitors the activities of investment advisors, broker-dealers, and securities exchanges. The SEC oversees FINRA, a non-government agency, and is the first level of appeal for actions brought by FINRA. Financial Industry Regulatory Authority, FINRA. FINRA is a membership-based self-regulatory organization that writes and enforces rules governing ethical activities for registered broker-dealers and registered brokers, examines firms for compliance with those rules. Commodity Futures Trading Commission, CFTC. The Commodity Futures Trading Commission and National Futures Association have authority over Futures Commission merchants and introducing brokers in commodities. Internal Revenue Service, IRS. The IRS examines financial institutions complying with the BSA, excluding those that are currently examined by federal bank supervisory agencies, or B, broker or dealers in Securities 31 CFR 103.4.6 B. 8, for example, jewelry dealers, money service businesses, casinos, insurance companies, etc. Federal Reserve Bank, FRB. The Federal Reserve is responsible for supervising, monitoring, inspecting, and examining certain financial institutions to ensure that they comply with rules and regulations and that they operate in a safe and sound manner. The Federal Reserve regulates state-chartered member banks, bank holding companies, foreign branches of U.S. national and state member banks, EDGE Act corporations, and state-chartered U.S. branches and agencies of foreign banks. Office of the Comptroller of Currency. The OCC charters, regulates, and supervises all national banks and federal savings associations, as well as federal branches and agencies of foreign banks. The OCC supervises 1,158 banks with assets of $14.1 trillion, which comprises 68% of all U.S. commercial banking assets. Federal Deposit Insurance Corporation, FDIC. The FDIC directly supervises and examines more than 5,000 banks and savings associations for operational safety and soundness. The FDIC is the primary federal regulator of banks that are chartered by the states that do not join the Federal Reserve System. Banks can be chartered by states or nationally by the OCC. Banks chartered by states also have the choice of whether to join the Federal Reserve System. Now, let's understand timeline of key U.S. and ML developments. Please click H icon to know more. Bank Secrecy Act, 1970. Impose penalties for non-compliance. Required banks to maintain records and report currency transactions over $10,000. Money Laundering Control Act, 1986. Established money laundering as a crime. Directed banks to establish procedures to monitor compliance with the BSA. AML Act, 1992. Required suspicious activity reports. Required verification and record-keeping for wires. Established safe harbor provisions. Money Laundering Suppression Act, 1994. Required regulators to develop exam procedures. Enhance training for examiners to improve identification of money laundering schemes. Funds Transfer Rule, 1996. Required banks to collect info on wires over $3,000. Required certain info be sent to each bank handling the transaction, the travel rule. USA Patriot Act, 2001. Criminalized terrorist financing. Strengthened customer identification requirements. Expanded the scope of money laundering to include broker-dealers, insurance companies, and other non-bank institutions. FinCEN CDD Rule, 2018. Required identification and verification of beneficial owners and controllers. Requirement to understand the nature and purpose of the customer relationship. AML Act, 2020. Updates the BSA, improves coordination and information sharing. Encourages innovation to do FINRA. Focuses on applying a risk-based approach to AML program management. Corporate transparency. A CT ships reporting requirements to the legal entities. Establishes beneficial ownership database at FinCEN.